What is going on, everyone? In today's video, we are going to be breaking down for you guys what is happening / happened in the FOMC meeting. Clearly, you can just look at price charts, whether crypto or stocks or the Dixie, and see that whatever he said was hawkish. But we're going to break it down for you what it means for the future. Is the Bitcoin and crypto bottom in, or is this simply another volatile move around the FOMC day? We're joined by Caleb Franzen on the show. You don't want to miss a single second, so stick around to the very end. T-Shroom, let's roll that intro.
Here we are.
All right. There we go. We got the whole team here. It's another Hump Day Wednesday show with T-Shroom, Tim, and Caleb Franzen over there in Europe. First of all, boys, I'm going to start with you, T-Shroom. How are you doing today?
Well, I'm doing better than I deserve, Tim.
Good.
And I'm feeling sufficiently restrictive right now.
Is the fiance all graduated now?
Now, Tim, you're coming in hot with the questions here. So yes, we had called a white coat ceremony. This is for people that are getting their PhD. In the case of physical therapists, they get a DPT, Doctorate of Physical Therapy. So yeah, that's what we were doing today, and we got to celebrate in the President's Suite at the Ben Hill Griffith Stadium at Steve Spurrier Field. So it was a ton of fun. It was a very high class environment, and I felt right in place. And I kept my nice shirt on. I did take my tie off because it was overly restrictive, but now I feel more adequately restricted for the investing bros. Caleb, how you doing, my man?
Love it.
I'm doing well, guys. I feel like risks are coming into better balance, as Jerome Powell said. So everything's going well, guys. Glad to be here as always on a Wednesday.
Yeah, nice. We're going to be breaking this down for everybody. We're just kind of getting into it, getting warmed up. You guys go ahead and get on here. Smash the likes. Let's get this out to more people on YouTube. They absolutely, over there at YouTube headquarters, like when people smash like buttons. We're going to be breaking it down for you. We were listening to it before going live, so we have our thoughts, our opinions. Got to start off. Before we get in, we'll look at some charts and look at some things. I'm probably not going to do a coin market cap open because that's going to be all messed up within the last 24 hours versus like what's happened in the last hour or so.
Sure.
But let's start off with just kind of initial remarks. Caleb, I'm going to let you start. How are you feeling about the FOMC meeting as a whole and what Jerome Powell was saying up on the podium?
Same old stuff. No major surprise. I think the big thing for the Fed over the past probably 6 months for sure has been to kind of maximize their optionality and the different paths that they can take forward. And so Powell, I think, continues to get a lot of pushback from, these questions that are asked in the Q&A portion, and essentially trying to back him into a corner like, oh, in these different hypothetical situations, what will you do? And he's saying, we're going to take a look at the data in its totality. Risks are coming into better balance, as I kind of joked here in the beginning. And, I think, like I said, he's just kind of continuing to optimize the flexibility that they have as an institution. So no major surprises there. One thing that did stand out, well, there were a couple of things that stood out to me in terms of some of the remarks that he made, but one of the things that did stand out to me is when he's really kind of talking about the path that we've been in for the past year, he mentioned historically fast disinflation. And, I think it was Nick Timoreos who asked him, like, should we expect for that pace to continue this year? Or are you afraid that we're not maintaining the pace of disinflation from last year? And he's saying, look, we had historically fast deceleration of inflation last year. So I think that in and of itself is a big win, just to kind of hear Powell and the Fed recognize and admit that. It's certainly not taking a victory lap, but it's about as close as we're going to get to a victory lap from the Fed. While still acknowledging, of course, that more work still needs to be done, right? So I think that's super, super important. Another thing that stood out to me verbatim, he said it's unlikely that the next policy rate move will be a hike. Yep. That was fantastic. Another thing that he had mentioned, a specific data point, and I've been talking about this a lot, is that non-housing services inflation has been higher than expected. And so maybe we could talk about that a little bit later on. There was a chart that I wanted to share on that. But, overall, like, It's just par for the course. I was on the phone today with my mom, and she was like, "Oh, how are things?" And I was like, "Oh, it's a big FOMC day." And she's like, "Well, what's your prediction?" I was like, "My prediction is it's going to be a lot more boring than people expect." And I think in a way I was right, but at the same time, we've certainly seen this pop to the upside, which has been welcomed. So I'm happy about that.
Yeah,
Yes.
I absolutely agree. T-shirt, what about you? We got, getting into the show still. We'll get into more details. We'll take a look at articles. We'll take a look at charts. But just kind of starting the show off with overwhelming kind of feeling. You guys in chat kind of give us your thoughts as well. You can type in hawkish, dovish, bullish, bearish. You guys want to explain your thoughts. We might read some of those answers as well. T-shirt, how are you feeling after Jerome Powell?
Well, if you look at the timestamps of every time that Jerome Powell coughed, and he coughed quite a bit, and then you correlate that with the Greek alphabet, you can actually start to see that they're gonna hike. No, I'm just kidding. No, so as this, yeah, we like to have fun here on the Investing Bros. Smash the like button. No, but what I was saying this morning on the 9 a.m. stream, I think is really the biggest takeaway still for me, which is that the market was very volatile in the run-up, both on the stock side and the crypto side of the run-up to this decision. And I don't know exactly why. It may be because there wasn't a unified consensus on Wall Street, perhaps, of what the decision was going to be. But now we're on the other side of that rising uncertainty. Right now we have certainty. We got the pause. The market can reallocate, can reprice assets, and immediately what we're seeing is a repricing of our favorite digital asset, Bitcoin, moving to the upside. Hopefully, we'll see that continued, and it's not just a spike and then a return lower to put in lower lows. But the big takeaway for me is we are on the other side of uncertainty, and the market now has the tools it needs to be able to trade for the rest of the quarter and the rest of the year. We'll see. I think that Jerome did a good job of calming the markets, even though he had something in his throat that kept him coughing and at a weird, sometimes weird times. But overall, pretty good. And I do have quite a bit. I wanted to bring up the real final sales to private domestic purchases chart that was referenced by Jerome very early in his speech. So we'll bring that up and talk about that as well a little bit later.
Yeah, we'll probably have a couple different topics just to camp out on different parts that he discussed. I'm going to be as brief as possible. I agree with Caleb's. I don't know if this is what you said was your highlight, but I tweeted that exact quote. Unlikely that the next rate move will be a hike. I also put another tweet out saying I'm getting a cautiously optimistic. Now, T-shirt before we were live said optimistic might be too optimistic of a word. And what I mean by that is I think a lot of people came in, and a lot of the reasons why crypto was falling this last week was anticipation that this was not going to be a very good FOMC day, that we were going to see more blood. And I ultimately think that it was a cautiously optimistic, hey guys, are we done yet? No. But we are doing better than a lot of people think we are. We're still trying to get to 2%, but we need to see data month by month, and ultimately they're not seeing any data. I'm getting the feeling, I don't know if he said this, I turned off at a certain point because I kind of jump on here, but I'm getting the feeling that rate hikes weren't even a part of the discussion, which right now is a bullish sign. When he starts to admit that they're discussing rate hikes, that's when you might get a little bit of a worry, a little bit of a pessimism. But for now, I think that he's still very optimistic that he has the correct restrictive rate, that we do not need to raise rates any higher. We might have to go a little longer. And here's the question, and I'm going to end with this. And I'm going to actually ask you this question, Caleb, because we've talked about this before. When he says we might need to go a little longer, do you think he means a little longer as in we might not see a rate cut until 2025? Or do you think he means we might need to go a little longer, like we're not going to get it in September? We might have to wait for like October or December or something. What did you think what do you think his implications were when he said we're going to have to hold off on a rate cut?
It's impossible to say, right? I mean, it's such a cop-out, but I'm going to continue using that 6-month Treasury yield, right? And so even today, that's still telling us no hikes for the next 6 months. So what, that puts us at November, right? So
maybe.
Yeah,
I think so.
So, no hikes until November. I think we have a meeting in November. So maybe we get one there. And then we also have a meeting in December. So maybe we get one there as well. So, we'll see, right? 4 weeks from now, if that 6-month Treasury yield is still where it is right now, then we're saying maybe one hike in December, right? And if that 6-month Treasury yield doesn't come down over the next 2 months, then we're really talking about rate cuts coming in 2025. So, I'm not sure where Powell's head is at. I guarantee you they're looking at the 6 months Treasury yield. I guarantee you that they're not paying as much attention to the 2-year. So that's going to continue to be my arbiter of truth.
Interesting. Yeah, if you want to show, we're going to start showing some screens here. I'm going to show you guys some bubbles, a couple of charts, and then we're going to get in and talk about some charts that Caleb and T-Shirt want to look at. But this is the CMEgroup.com website. Last month, it was predicting September would be the time that we get our first rate cut, right? We're seeing 43.2% saying we're staying paused, 42% saying a rate cut will happen. But so of course, that's lower than last month. Right now, CME is saying that we should see a rate cut in November. But like Caleb said, I think this is still a wait and see. There's a chance this ends up slipping in. Only a couple of months ago, we were supposed to get one in either June or July, and that time frame has been pushed back. So this one easily could be pushed back as well. But we'll keep you guys posted on that. Go ahead in comments in the chat right now. I'm interested in your thoughts. Post the month you think we get the first rate cut. We're not going to show coin market cap, but let's just show the bubbles here, T-Shirt, real quickly and take a look at some big movers. Wormhole, H-bar, dot, some of our biggest green bubbles right here. H-bar, 16.1%. Good for them. Wormhole 16.3, and again, dot up 11%. There's a lot of green here. A couple of red still. It's not like it's nothing but a sea of green, but as a whole, the last 24 hours, and mostly because of what's happened the last hour and some change, is back squarely in the green. You'll love to see it. We kind of, I lost. I don't know what happened there. Screen went black. Sorry. There we go. You love to see this. We kind of said this was a good chance after we had a couple of days of seas of red. A lot of times you do see the reef bounces. We're going to get further into the conversation on is the bottom in or is it not? But you're going to come over here and look at some charts. We're on 10-minute chart right here. Bitcoin up, moving to the upside. We are moving back down. We're back down to 58.5 right now. We did top out right up here close to 59.5, not quite to 59,500, but you guys can see the W chart is still in play. If you come out to larger time frames, I still believe we have a little more juice left in the tank. I think we're going to get run up back into this breaker block that Lux Algo has for us. If you guys were or have the privilege of being in our VIP group, meaning you have Lux Algo or you are one of the OGs of our members, literally at 150 or so, sometime right before 2, I put in several trades, suggestions in that group. Some of you might have been able to take advantage of. We didn't quite get my Bitcoin take profit, but when it comes to Solana and Cardano, both of our take profits actually hit just perfectly. Why did I get these levels? Well, it has a lot to do with Lux Algo signals and support and resistance levels. If you got in there, you would have got a profitable trade on Solana and Cardano. Taking a look at what those are doing, let's turn off Lux and just take a look at some of these altcoins. Again, having nice big moves back up to some former resistance from some days ago. That's Cardano right there, getting back up to about 45 cents, give or take. Solana getting back up over $130, pushing closer towards 140. We'll see if that's in the cards. I think there's still a little more upward juice left here. But as a whole, everything seems to be moving up. The ones I want to bring you guys' attention, and this could kind of kick off some of our conversation that we're going to get in here. Dixie. This is one of the reasons why we are pumping right now. The Dixie taking a good spill. Now, this is the 10-minute chart. When you're on the 10-minute chart and you're looking at it like this, that looks very significant. You do have to come back out. If I were to go to the hourly chart, for example, we'll kind of find a medium point. We're just back down to some levels that we were at here yesterday even, but definitely responding pretty negatively. And then here's the conversation, guys. Volume. We've had the largest volume candle this most recent hour, the 2 o'clock hour volume candle, the biggest one we've seen since way back here, back on March 20th during a big dip. Of course, we would go on to bounce and rally, go up to the upside. So not saying that it's nothing but downward action from here, but that did say pretty loudly the bears came out when it comes to Dixie, and they said, all right, the dollar is losing value. Another one we're going to look at here, S&P 500. This is the SPY. Again, we've been in this series, and Caleb Franzen actually is the one who really showed us this trend, I think, last week. But quietly, while crypto's been setting lower highs and lower lows in a downward trend, people act like the stock market's really bad, but it's not. Look at this more tight-knit higher highs, higher lows. We just set in another higher low right here, and then we got two very, very bullish candles here on the S&P 500, showing you guys as a whole the stock market still looking very, very strong. While there's been moments of weakness temporarily, in this short little time period, if you're just looking at this section right here, since this pullback back on April 19th, this is a bullish trend right here. Higher highs, higher lows. This should be one of the reasons you guys continue to be bullish here long term and not freak out. I'm going to start asking questions here, but have you guys seen, you can go off my screen now. Have you guys seen more recent Twitter bears getting very, very loud and acting like we should now be expecting? I saw a thread where there was a group of people talking. They were arguing whether 15,000 was too bullish and if we really should be seeing 10,000 in the next couple of weeks. Some of them saying 5. Now, this is a pretty extreme group, but have you guys seen the bears get a lot louder here more recently? What are your guys' thoughts on what's happening now? I'll throw it to you first, Caleb, and you can answer that question, and we'll get into some of your charts that you want to look at.
Price drives sentiment, so I'm not surprised to hear that. I've been spending a little bit less time on Twitter lately, so I haven't. Yeah, maybe. So I haven't seen as much of that, but I mean, look, we were taking victory laps when things were bullish. They can take victory laps when things are bearish, but let's not talk about 15,000.
Yeah, I've been seeing a lot more from the bears as well. They've been quiet. They've been quiet here for a little bit, but you know, I think it's right. You know, this is their moment to be vocal, and to be honest with you, it's, if you're wise, you know, you'll give the bears a little bit of respect here. Maybe give them a little bit, give them a little bit of your attention. Maybe see what they have to say. It doesn't mean you have to agree with them, right? But they were right here, you know. Mm-hmm. So listening to the people that are right isn't a bad idea. It just doesn't mean you have to agree with them. So that's my take, and they have every right to have a little bit of a victory lap while it lasts. Mm-hmm. That's the thing is, you know, they're likely to be wrong in the longer term if they are, you know, perma bulls, especially on an asset like Bitcoin or the S&P for that matter.
Yeah, fact. Yeah, I think so. I think it's one of those things. It's just, again, we've talked about it on charts over and over and over again. You got to zoom out. And we're talking right now, this recent pullback on Bitcoin down to 56,600, give or take, I think is this lowest pullback. We're talking about a 25% pullback from the all-time high. Historically, that is absolutely nothing. And the truth is, we've discussed the concept. Again, 56, 55, you guys remember, was the bottom we've been talking about for a while temporarily. If that gets lost, we talk about 48, but I've been a pretty big proponent of let's wait and see what the market looks like when we hit that 56, 55K zone. And I think there's an outside chance that we need to get probably 24, 48 hours past all of this and watch how whales and institutions kind of respond to this. But I think that what we saw from Jerome Powell does go a long way into saying potentially that 24, 25% pullback we just exhibited was what was needed to clear out some space. And you might see, I'm not going to predict a brand new all-time high in the next like 2 weeks or something, but we could start to see a slow creep back up into the 60s, that sideways action, and then maybe see an all-time high later on in the summer. I think this is right on schedule. I put a tweet out this morning about that as well. I think that people are underestimating history and historical precedents for how Bitcoin responds around halving cycles. And I think that we're just looking like we're repeating what we've always done. We get overexcited about the halving events. We rally up into them. It gets a little boring, maybe a little down at first in the first couple of weeks. And then we have this very long, drawn-out sideways action before new all-time highs are hit. Well, you guys can respond to that more in a little bit, but kind of take what you think about that, Caleb. And I know you have some charts you want to show. Let's get into some meat and potatoes here about some of the charts of what the FOMC meeting means for crypto and stocks and all of your investments.
Okay, let's go to my screen, T-Shroom, if you can. Perfect. Just want to make sure we're on. So I have 3 things kind of outlined on here. Okay, so in blue, we have an AVWAP. That's an anchored volume-weighted average price. That's from the ETF approval highs in early January. And then I also have the lows of that move. So I just throw an AVWAP on the lows that came at the end of January, basically at 38,000. And so you can see we've come right into this level and we're starting to slip below there. What does that mean? That means that now the average buyer since the ETF approval is now actually underwater. That's what that's telling us. And so this is an important data point because it's really providing a psychological perspective into how investors are positioned in this market and where price is relative to their position. So that's super, super important. What I've also done is I've thrown on the short-term holder realized price, depending on which data source you look at. It's somewhere between 58,000 and 59,000. So I have those specific levels outlined on here right now. And you could basically see the price of Bitcoin is trading at or below all three of those major levels, right? Both of the AVWAPs, and let's just call the midpoint of the short-term holder realized price. And so for me right now, this is without question, the biggest headwind that we have right now to be bullish. Okay. So if intellectually honest bears want to be bearish, this is a great data point for them to reference. And this is certainly something that I'm referencing, saying this is making me much more defensive in this market environment. It's the same message that I was actually saying in August and September of last year. And I said, if and when we can get back above the short-term holder realized price, we can get super bullish again. And when that breakout happened in early October of last year, we ripped from 28,000 all the way up to 73K, right? So again, this is where we want to continue to be dynamic and flexible with other dynamic indicators and statistical levels. And so for me right now, the three things I'm really paying attention to like a hawk, if we can get back above all three of these levels, basically get back above, I'll be generous here, right? That AVWAP here from the ETF approval highs at 60,600. I'm going to want to give a little bit more wiggle room, and I'm going to want to see us break above 61,000 for me to really get risk on again in this market and really be looking to take some super aggressive short-term positions. Until then, I'm not sitting on my hands. I'm still taking some opportunities. But I just don't see the need to force the issue. So I want to see us constructively get back above these levels and then try to reestablish an uptrend once more.
Now, you said this a lot, I think, last week, and maybe referenced it a little bit before. For some of our audience, can we get a little more insight into when you say I'm defensive? What does defensive mean? Does that mean you're selling? Does that mean I'm just not buying right now? Does that mean you're selling a certain percentage? And if however open you're able to be with us, I don't want to, if there's some secret sauce in there that you keep for Patreon members or something, let us know. But yeah, because when you say that, I'm like, I feel like I understand partially what you mean by defensive, but maybe that would help to get more definitions. Are you selling? You're buying? What does defensive mean?
Perfect. So it's always going to depend on what my time frame is with a specific position, right? So for example, last week I got stopped out of all short-term altcoin trades. Got stopped out of literally everything. So I was super happy. I've been able to avoid a lot of this punishment yesterday and today. That's fantastic. Yeah. I didn't touch any of my Bitcoin stack, right? So even in kind of like the short-term portfolio that I trade more often, where Bitcoin is even the largest position in that portfolio, haven't sold any, right? And so what I've been doing is just really rolling everything in the Bitcoin here. And again, just super, super patiently. And so as I think about now trying to identify potential risk on opportunities where I'm looking to take aggressive long positions, when I say I'm getting defensive in this market, it doesn't mean I'm not taking positions. It simply alters the way I'm managing positions and the size that I'm using when I take them. So when I think about getting defensive, there's two things that I really do. I make position sizes much smaller and I make my stop losses much more tight, right? And so even then, it's like, I don't know if we need to get that granular with it. So maybe I'll kind of cap my comments there. But those are the two biggest things. I reduce my position sizes and I tighten up my stop losses.
Yeah, that makes a lot of sense. You're getting a lot less aggressive, and you're not willing to risk that much. That makes a lot of sense.
I would actually say I get more aggressive in terms of when I take a position, because I want to be wrong super quick. So I don't want to see us come into a potential support level and then get evidence of a rebound. I want to be like coming hard into that potential support level and have my stop loss within 1.5% away, right? So I don't want to see us come into that support bounce and then my stop loss is now 3 to 4%, right? I want to take it. I want to try to catch a falling knife almost. So I'm super aggressive with that. But because there's such a high risk with it, I'm reducing my position size and I'm keeping that stop loss super tight.
Okay. That's very, very interesting. Very, very cool. Yeah. T-Shroom, let's transition here. I know you referenced a chart you want to take a look at. and get in here. Again, it's getting here at about 3:25. Guys, if you're enjoying the conversation so far, make sure you smash the like button. When we have this conversation, we're going to do look at this chart. We're going to answer some questions. You guys have questions for any of us, but mainly Caleb. Of course, he's only here one day a week, so I want to prioritize questions for Caleb. We're going to do some early Q&A, get back into some other conversations, take a look at some other things. So today's show looks a little bit different. But T-Shroom, what was the chart you were mentioning earlier you heard that Powell referenced and you thought was very important for us to take a look at again?
Yeah, well, what was being referenced was, and I want to get a good definition for it, is this. It's the final sales to domestic purchasers less the government, so not including the government consumption expenditures and gross investment. So this is just demand. It's just what is being demanded domestically. If you could go out and measure how many more items there are in a shopping cart, that's kind of what they're going for. How many more pools are being installed, right? How many more Ubers are being hailed, so to speak. And if you look, this is one of the main indicators that the Fed does consider. And if you look since 1950, it's been up and to the right, with some exceptions, notably here during the 2008 financial crisis in the United States, that would eventually ripple internationally, and then here, obviously, in the pandemic. But since then, demand has been robust and, dare I say, resilient, right? So there is a lot of hope, even though we had a pretty cold print for GDP recently. It getting down from 3.4 down to, was it like 1.6 or something like this? That's not exactly what you would hope for, right? If you're trying to cheer on the GDP to go higher and higher. But what do we have? We have a Fed that is ultimately trying to reduce inflation, and when the measures that they take, the quantitative tightening, is also going to have an impact on GDP. In theory, it definitely is not a one-to-one. There's a lot more going on in the economy than the Fed. But to see a decline in GDP is something that we could expect while the Fed is having a period of quantitative tightening. What we wouldn't expect, or what would be more challenging for the Fed, and that would leave them scratching their heads, is if this was to tick down, because this really only ticks down in pretty extreme scenarios that are not structural, right? But they're emergencies, right? So, and what do I mean by that? If it was structural, then you would see a peak, or you would see a sell-off, and then no recovery. It would just be flat, or even continue to go down. That would be structural. That would be humans don't need food anymore, or something like that, right? Something major has shifted. People don't have any money to go shopping anymore. People's quality of life is just, completely tanked. But what we see is that there's a dip, and then there's a recovery. In the pandemic, we had a V-shaped recovery. So overall, I think this is really important, just because it illustrates what is going on in the American economy, at least. There are weak points. We've been seeing that with inflation being sticky. We've been seeing that with the labor data that's been coming out being less than perfect, from what you'd want to see from the Fed's point of view. But when it comes to domestic purchasing and demand, that is remaining pretty resilient. I'd love to get you guys' take on that, for kind of what I just said.
Can I just chime in on that really quick?
Absolutely.
Feel free to go to my screen here. Oh man, I thought I had it open. Let's pull it up. Boom. Okay, so I wanted to expand on the chart that you were just going over. I loved that, and it's not something I've looked at in the past. So I always like to add a new data point to my toolkit. And what I wanted to do, the only thing I actually wanted to change on what you just showed there, is looking at that same data point in year over year terms. So we can actually measure the growth rate of real final sales to private domestic purchasers. And so we can see that the growth rate in Q1 came in at 2.77. Let's just call it 2.8%, which was slightly lower than the Q4 print from last year at 2.9%. The reason why I wanted to actually check on that is because there was another chart I wanted to show with you guys, which is real GDP. Look, when real GDP gets reported, they show it on a quarterly annualized basis. I hate annualizing quarterly data. I hate annualizing almost anything. It makes no sense to me because growth is not linear. It's just not. So what we want to see here is looking at year over year, because this actually tells us where has the economy been over the past year and how did that change on a sequential basis relative to the last quarter. And so we could see, looking at real GDP, it came in at 3%. In Q1 of this year. In Q4 of last year was 3.13, right? So slightly lower. And then in Q3 of last year was 2.9. So as far as I'm concerned, economic growth is really chugging at a strong pace here, right? We can see in a post-GFC environment, we barely got above 3%. And if we did, we came right back, right? And we still experienced positive growth through this period. But we can see, generally speaking, like coming into this above 3% figure or right around that level is very solid growth from a real GDP perspective. And so I think that's really important because one of the things that we had talked about on the show, I think it was last week or the week before, was something about stagflation, right? We were hearing all this stuff about stagflation. You guys wanted to kind of get my thoughts on that. And I literally laughed it off, right? I was saying, we don't have any stagflation. I don't know what people are talking about. And again, the people who are talking about stagflation are the people who are focusing on the quarterly annualized data for real GDP growth. And that's complete BS. That's not what you want to do as an economist, is look at annualized data. So I was really happy to see this. Powell referenced stagflation today. I don't really understand where talk of stagflation scenario is coming from given US data. I don't see the stag or the flation. So,
love it.
Again, we are not in a stagflationary environment, particularly when we have real GDP growth at 3% year over year. This is really good data. This is really good data.
Yeah. People are still going out. They're buying stuff. They're not canceling their Netflix subscription. Goods and services are flying off the shelves. Maybe not as aggressively as in other countries like China, right? Or in other places where the demand is more elevated, right? But it's healthy, I would say. And so, and especially it's good to see that throughout a prolonged period of quantitative tightening, right? Because we could easily be in a deep recession right now. We could be in a situation where we're seeing -1, -2, -4% GDP, and we would be in a totally different scenario, right? Jerome Powell would be standing up at that podium with a little bit more weight in his shoes to be able to keep this economy afloat and keep faith in the dollar and the bond system. So overall, I think it's we've covered GDP pretty well here. Got it from a couple different angles. I like it.
Yeah.
Can I actually make one more point on that? Or
yeah,
go ahead.
Yeah.
Go.
This is the Caleb Franzen Wednesday show. When Caleb Franzen wants to speak, he gets to speak.
I appreciate you guys, man. Okay, so on my screen here, we're looking at the GDP growth, the forecasted 2024 real GDP growth in the US, the UK, Europe, and Japan. What stands out in this graph? Does anything stand out here to you guys? Does it look like one country is leading all of the rest in terms of real GDP growth and the expectations for this year? Yes. We could talk about maybe stagflation happening in these economies, but we cannot talk about stagflation happening here. And so again, this is the expectation of 2024 growth. Okay. So this is how forecasts are evolving for this year. And so we can see that forecasts in all of these other countries have been flat, literally stagnant for the past 6-7 months, while US expectations for growth have been climbing nonstop climbing. So again, we're in a massive divergence here where it's the US versus the rest of the world. We can talk all this crap about, the economy is not great. There's these weak data points. The labor market's here. This is happening with delinquencies. This is happening with auto loans, this, that, and the other. But once again, we're the cleanest shirt in a dirty laundry basket. And if you have a hot date that night, which one are you going to pick? You're going to pick the US every single time.
I love it.
Yeah, that's good analogies there. We're going to get some questions here in chat in just a second. So go ahead and start dropping some questions for all of us. I'm going to say, just wrapping up kind of with a bow, what you guys are talking about. This is the stuff that you guys get into, those charts with the GDP and everything else. I'm just kind of adding it to my bag of feeling I'll put it this way. If Jerome Powell isn't feeling this way, I'm feeling cautiously optimistic. Why? Because I told you guys for a while, I thought that 55, 56 was the level. It was my level to watch. It was that 20, 25% pullback area that has been consistent with this entire bull market from 15.5 on Bitcoin. To me, the outside chance of the 48K was something along the lines of either with this news being more hawkish than it was, or if there was something else in the news, and this could still happen, but if something really bad happens that really spooks whales and the institutional investors, then we still could get down to the 48K at this point. But I'm kind of getting to a place where, again, I'm cautiously optimistic after being bearish since the top. And yes, guys, like when we hit 73, I told you guys it's probably time for a cool off. Now that we've hit a brand new all-time high, we probably need to do another 20% or so cool off. And it looks at this point like I got my number. I feel short-term bearishly satisfied. if that makes sense. Like my short-term bearish perspective that we were overextended after hitting new all-time highs, we were getting close to the halving and we needed to cool off. I'm satisfied. I'm not saying that we can't go down lower, but I'm saying that there's a lot of things happening on the stuff that you guys were explaining right there. Things we've hit all the take profit levels on the daily, the 4 hour, the 1 hour that we're calling these lower levels. So I feel satisfied. Let's watch the next couple of days to see if the market agrees and we start to see some bullish volume come in to confirm that. But I like what we're sitting at right now in the market. I'm feeling bullish again in the short term, not only long term, but short term as well. Let's see some questions in here. And then I have some more topics I wanted to discuss with Caleb. I will be leaving at 4. I know you, T-Shroom, you guys can keep going on. I have to get into I have another meeting. I will not be at the members only stream today, but T-Shroom will be a part of that. So continue to go over, be in that members only stream. I'm going to be live with Stocks with Josh at 4:30, and I have to prep with him. Let's see. Sansa said, I will never understand the markets. Everything goes up now. Everything is bleeding. What the heck? Yeah. Sometimes markets are confusing. Do you see more downside for Bitcoin? Maybe. Okay. So we kind of talked about this. Ma Peter, and I'm going to ask you, Caleb, do you see more downside for Bitcoin, maybe to 5250K? I kind of just gave my answer. So what do you think?
I'm open to it. I talked about this. I can't remember when or where it was, but I'm looking at that 200-day moving average cloud still. So like I said, we've lost now the short-term holder realized price. We've fallen below those anchored VWAPs that we covered. And so for me right now, the next kind of dynamic level that I'm really focused on is that 200-day moving average cloud. And I think that gets us right between 49 and 50,000. So for me right now, that's like, I'm telling you guys, I'm defensive. If we lose the 200-day moving average cloud, I'll actually get outright bearish. I'm not bearish right now. Like I said, I'm defensive. For me, everything is scalar. So as we start losing these bullish signals one by one, we're no longer trading above the anchor VWAPs. We're no longer trading above the short-term holder realized price. We're making lower lows and lower highs. We're falling below the 200-day. Like all of those things progressively make me more bearish, right? Mm. So if we fall below 50K, that for me is going to be the sign of major concern.
Interesting. Yeah, I think that's something to definitely keep an eye on. Show my screen here real quick, T-Shroom. You're going to see two lines here. Orange is the 155. I like to track that one. It's just got a weird amount of touches of support. The purple line is the 200 that he's talking about. And look here, guys, we lost the 200 back here in February of 2018. And even though we rallied back above it, this, of course, was the bear market. We would go on to have some pretty long months of being below that 200. Now, there was the fall below here in September of 2019, where technically speaking, if COVID hadn't happened, we would have only spent a couple of months. That would have been like, 3 or 4 months below it before getting back over it. But the point still stands. I think I agree with him. I don't think we're going to see a thing if we end up losing the purple line. And for reference, this is what this looks like. If we lose this purple line and get below it, you're probably looking at least a couple months of being below it before we're able to recapture it again. I don't think I would say nail in the coffin if we lose the 200, the bull market is over. But I would say, all right, well, that's going to delay some things and possibly give us a couple of months to buy some cheap Bitcoin. That's one way to think about it. We have a kind of a joke of a question, but I'm going to ask it. Username says Caleb. Oh wait, I thought he said Caleb. Could you ask Tim to let us know to buy Link? Caleb, maybe I've asked you before. Are you a Link Marine? Do you think Link's going to have a good bull market, or are you kind of one that you're just kind of watching from the sideline on that one?
I don't own any right now. I had been trading it, and like if you want to go to my screen there on Link here, one of the concerning things is that it has flipped that 200-day moving average cloud into resistance. Now you can see we had the breakdown, we came right into that zone, and we got massively rejected on it. And this is Link. So I don't know. I loved the structure here when we had this breakout. I loved this channel range. We got another breakout there. We exploded from 17 up to 23. And things were looking good, but then we have a breakdown below here, below 17. We're making. Right now this seems super difficult, and so like a lot of things right now, it looks like it's hanging on the edge of a cliff as far as I'm concerned. Yeah. But Bitcoin looks the same in a lot of ways.
Interesting. Well, that's probably not what Username wanted to hear, but you can't argue with charts. The charts don't care about your emotions. That is what it is. Let's see here. We'll get one more question, then we'll get back into some topics. Let's see. I don't know if there's a question. Kyle Field says the psychology of dipping to the 40s could be devastating to those who can't hold. Otherwise, it will recover. I think what you're saying is if we get down significantly into the 40s, let's just call it below 48K. I think Kyle's trying to say that could be pretty detrimental to people's psychology in investing. I would tend to agree. Again, I've kind of said I think 48K is kind of my floor at this point. Do you guys agree with that concept, that sentiment? That'd be pretty devastating to break below 48?
For sure. I mean, even I'm saying I'll get outright bearish if we fall below 49. So
yeah,
it's proof positive right there, right?
Interesting. Yeah.
Yeah,
Well, hey,
I do think we're in a little bit of a different world if we were to get down below 48, 49, just because that's the 0.5, right, for the big Fibonacci, I believe. So that, that's not a good look. Does that mean that the buy thesis overall for Bitcoin has changed? No, right? Unless something has changed. But it's just price, and it's easy for me to say, but may not be so easy for someone who hasn't managed risk very well to say.
Yeah. We're gonna keep monitoring this, but you guys, you heard it here first. Tim is bullish, and the whole world is bearish. What a day! What a day we live in. I'm just kidding. Let's get our factoid of the day, and then we're gonna jump back in and talk more some stuff about FOMC, some more charts. Tishan, what do you got for us? What did the elf cook up for the factoid today?
Absolutely. Well, throughout the turbulence of the markets, we hodl on, and if you take profits, you're going to have to pay capital gains tax. One way to greatly reduce your tax bill at the end of the year is to go ahead and trust who we trust, which is iTrust Capital, with your crypto IRA. That's right. Crypto is now compatible with the IRA and Roth IRA system here in the United States, and they're making this episode and many episodes possible to be brought to you. Tim and Caleb, what state has the U.S. National Mint? Is it Georgia, California, New York, or Tennessee?
I don't know this one. I feel like this one you might. Oh, Caleb, you're muted. I don't know if Tisha muted you or you muted you.
That was me. I did that to myself.
Gotcha.
Self-sabotage. We like to do that every now and then. I said C. I'm going to go with C, New York.
Listen, I'm gonna vote with the man who probably knows way more about this topic than I do. I've never sat down in my life and thought, where do they have a national mint? Never been a thought of mine. So let's go to see New York, or should I spread it? We'll go see New York. I'm just gonna agree. We're gonna go all in together.
All right, here we go. Both got it right. Very nice.
Sweet.
Now, it's actually been a little bit of a trick factoid today. The Mint headquarters is a non-coin producing facility in Washington, D.C. It operates Mint facilities in Philadelphia, Denver, San Francisco, and West Point, and New York, and a bullion factory in Kentucky. So there's multiple cities and states that do house the distributed Mint, but the headquarters of which is in the capital of the Federation.
That's a weird factoid. I'm not quite sure if we got it right or not after all this.
Well, you did, because there's a Mint in New York.
Well, hold on. We'll go back to the options. Can we go back to what were the voting options? So
California. Yeah.
There was no Georgia, so Georgia was out, but there was a California option. There was no Tennessee out. Okay, so we could have said B, and theoretically speaking, been correct.
And that would have been tricky. That would have been tricky. However, what I will say is that on this Wikipedia article, there is no California. There is a city of San Francisco.
That's
and the question is what state? And now my argument is lost, and we will go back to the broken.
All right.
I have not been sufficiently restrictive on the factoid elf, and beatings will continue until behavior improves.
I was hesitant if it was going to be California because I know that the San Francisco Fed is huge. Side note, it's the ugliest building in San Francisco. It's just horrendous. It looks terrible. I used to walk past it and just actually get depressed. Anyways.
Don't do that.
Yeah.
No.
Don't do that. Well, let's do this. All right. So we've been talking here for a minute. We've been a little bullish. Markets are cooling off here a little bit. A lot of the gains that we got in the last hour during the 2 o'clock hour are actually coming out. This is the S&P 500 right here. You guys can see that blue. We're actually in the middle. The wick comes all the way down here. We need to get back below that wick for us to call this a bearish engulfing candle. But I wanted to change conversation into the stock market. We've seen some weird things here, Caleb, since you've been with us, and you can address the S&P 500 as well. But one of them, or a couple of them, for example, if I can scroll down further, there we go. We saw Meta be a little funny here. Had some great numbers and yet had a big correction and dropped back down into around 417, give or take. Even though the numbers were good, right? But then you had Tesla, of course, who missed on numbers. But they jumped up and they came even as high, almost got back up to 200 here. What is happening in the stock market here recently? You can even address if you want to do short term based off what charts are currently doing. Break us down what you're looking at in the stock market right now. What's happening? Because we like to stay in crypto, obviously, but you definitely have your head in the stocks as well. Can you explain it to us a little better? Why is it so chaotic?
Yeah, I mean, earnings season is always a mess, and like for me personally, I think because look, I think we just got Amazon yesterday, or we're getting it today. I can't remember now. Like time is flying by, and
Amazon's up.
The Amazon came out.
Well, I don't know if it came out or not, but I'm seeing that since we opened this morning, we're up 3.7%. We're dropping. We're up higher. We're dropping right now on Amazon back to 181. Okay. But briefly here, an hour ago, we were up at 185.
Yeah, it was yesterday. It was a beat on EPS and revenue for Amazon.
Okay, cool. I had a feeling it was yesterday, and it's one of my largest positions, and I didn't even really pay attention to what the earnings was. Look, for me right now, we're still too early in earnings season to come away with any meaningful takeaways. So for me, what I'm going to want to do is take a look this weekend at a recap of the earnings data. There's a company called FactSet that does great reporting on earnings data, looking at sales, looking at EPS, looking at forward expectations, the whole 9 yards for each individual sector, everything. So I'm going to be waiting to kind of draw any meaningful conclusions from there. So when I look at individual companies and how S&P 500 internals have been behaving, 2 weeks ago, we had a nasty week in the stock market. I think the S&P 500 was down like 3+% 2 weeks ago. But internal data actually improved versus the prior week. That was a very strange kind of divergence that took place. Last week, we saw a strong week for the market. I think the S&P was up 2.7% off the top of my head. And what we saw again was continued constructive improvements. Internal data was actually strengthening under the hood. There's a bunch of different metrics that I use for that, looking at new 20-day highs, new 50-day highs, new 52-week highs, and then lows on all of those same time periods, the amount of stocks trading above their 20-day, 50-day, and 200-day moving average. There's all these different things that we could take a look at to measure the internal data of the S&P 500. It's like the current of the ocean, right? It's like you have the waves that are always coming and going, but what's the current doing? How's the mix below the sea level doing, right? So that's why I like to take a look at that. And so we've seen constructive dynamics take place, and we need to just see follow through. It's like I've been saying it for the past month, talking about crypto, and I've also been saying it for the stock market itself. Is like we keep seeing these constructive dynamics take place, but we don't shift into an outright bullish regime. Those constructive dynamics fade and they deteriorate. And they don't deteriorate for long because a week and a half later, we're talking about constructive dynamics taking place once again. So it's like bulls aren't winning and bears aren't winning in this market. It's been super difficult. I think that's why a lot of these bears are getting really testy on Twitter, right? It's like they feel like because things have kind of come down, and certainly in crypto they have, in the stock market they haven't come down too much, I would say. But they're taking victory laps as if everything is down 10, 15, 20%. It's just not the case. So I think people have been really testy in this market, bulls and bears alike, because first of all, it's been confusing. And second of all, it's been choppy as hell. So, it's like bulls get some confidence and some momentum in their favor, and then and then bears take it right back. Bears start to get confidence. They start to get momentum in their favor. Bulls take it right back from them. And it's like, it's just been this massive tug of war. So for me, again, that's just another reason to remain really defensive, right? And it's like, look, I bought stocks last week. I bought a little bit. Did I buy any this week? I can't even remember if I did. Time is flying by, man. either way, it's like I still want to be buying some assets. I still want to be buying long-term portfolio holdings. The same way I bought more Bitcoin this morning, I bought more Bitcoin last night. It's like, that's not going to change. The only thing that's going to change is the pace with which I'm buying and the amount that I'm buying. So, the stock market's going to do its thing. Earnings are going to be a driver. I don't want to jump to any major conclusions about how earnings have been for the market as a whole until we get the official data this weekend.
Gotcha. Interesting. Now, Tishan, what about you? What have you been thinking about when you're looking at stocks? Any of your stocks? I know you had one pop off you really, really were excited about. What's happening with your stock portfolio?
Well, yeah, the cannabis. So, I mean, the overall cannabis narrative is shifted. It seems to be that Biden may be kind of trotting forward this opportunity to deschedule cannabis as a Schedule I drug and as a campaign piece. And, I kind of don't care that he's using that as a pawn. I think that it's long overdue, not to dip into my own personal ideologies, but I think it's long overdue for cannabis to be legal, to be descheduled with meth and heroin. So overall, though, we could see, and I was talking about this on the 9 a.m. stream. I actually like to get you guys' input on this because I'm not sure if I'm right on this. It's kind of a hunch, but we could see capital rotation into the cannabis stocks as they see a potential big upside opportunity of deregulation in the industry of cannabis, or is that kind of a misguided notion, and that money that's going to be earmarked for Bitcoin, for Ethereum, and for the altcoins is just eminently going to kind of either dump into crypto or it's not. That's something I'd like to get you guys' take on. And then there's something that I've been reporting on throughout this week that we were supposed to get an update on, and we have that update. But I wanted to hear you all's reaction to kind of the cannabis theory here.
So kind of pitch it again. You're
Could
saying
cannabis legalization be a headwind for crypto as rotation goes into cannabis stocks rather than crypto?
I don't know. Caleb, what are you thinking?
Absolutely not. No.
There you go.
Yeah.
And look, I wouldn't touch these cannabis stocks with a 10-foot pole. They just bleed out. If you have appetite to buy risky stocks, go for it. But there's a massive quality fall off when you're looking at these cannabis stocks. So just look at how they've performed relative to the S&P. Look how they've performed relative to something like ARKK over the past few years, right? And it's like ARKK has done terribly off those highs, and even that's probably outperformed these weed stocks.
Mm-hmm. And I can attest to that personally. I got way overexposed a couple of years ago to cannabis, and ultimately had to sell a lot for a loss. Did well from a tax perspective that year, but overall, I don't think it's there yet. I think that there's still a strange incompatibility with cannabis legalization, regulation, and Wall Street. I just don't think that it's there yet. We saw a huge spike. Some of these stocks did 22%. If you can time those spikes, you might do well. But I agree with you, Caleb. Not only do I think that capital won't be diverted away from crypto and into cannabis, I think that probably these companies still have to prove that they're going to be profitable. Bitcoin mining companies can do that. They can show that. Crypto projects kind of can show that. They're a lot further from needing to deliver on that promise of revenue. And in some sense, it's even questionable if crypto even trades based on those types of notions and those types of investment approaches. But cannabis, you still need to show that the cost to grow dank nugs and sell it needs to be less than what people are willing to pay for it. And we just haven't seen that, especially with the rise of alternatives like Delta 8 and things. But you didn't tune in for a bunch of cannabis talk, did you? It is a concern to some extent. I think I agree with Caleb. I think that the market has gotten burned too much on cannabis, and it's just not going to get the allocation that maybe I was starting to theorize about. But we did get this. Treasury's first buyback since 2002 sparks market liquidity. The U.S. Treasury has announced a buyback program set to begin May 29th. This is on the Yellen side of the house. May 29th, 2024, aiming to improve liquidity in the Treasury market through weekly operations of up to $2 billion per operation, up to $500 million per security. This initiative, the first since 2002, is expected to benefit primarily dealers and make the market more liquid. The program will run until 2024 and is seen as a preemptive measure to manage liquidity. It is not the same as quantitative easing. as the Treasury cannot print new money. I like how they make that distinction there. I don't know who's writing this, if it's a journalist at X or an AI or what it is, but that last bit,
Grok.
yeah, I think it might be. I think that last bit is kind of telling that this may have similar effects as quantitative easing, but it shouldn't be seen as such. But it's the first time it's happening since 2022. Caleb, what is your reaction to this?
No major reaction. There's a lot of people who really pay attention to how the Treasury is positioning within the market. It's always kind of been not necessarily over my head. It's just not a rabbit hole I really want to go down. I did that with the Fed, so I can't balance both of them.
Sure.
I think at the end of the day, right, it's like if that's a boost for liquidity, all else being equal, that should benefit asset prices as a whole. It should, all else being equal, not put a bid because they're not going out and buying the treasuries themselves, but just if it lubricates the pipeline for other sources of demand, then that's good, right? So I think it's really just that simple.
Yeah, and the way that I was kind of reading it, kind of moving into this week, moving into the May 1st decision that came out today, obviously overshadowed by the FOMC decision, is that when they're buying back the treasuries, they're making the treasury market more scarce, right? So bond values, maybe not in a dollar amount, but bond values become more scarce, become more valuable, and therefore the rates could come down. Which, if the rates come down, that's less of an incentive to sell Microsoft, to sell risk assets, and rotate into bonds. So I think generally it increases liquidity and it de-incentivizes rotations into fixed assets like the treasuries as those rates come down. So at least that's my reading of it. But I think you put it well, Caleb, is like, the market pays attention to the Fed. When the treasury matters, we'll know. But ultimately, this should be a net positive for risk assets such as your Microsofts, your Amazons, and your Bitcoin.
Agreed.
Yeah, I think so. Now, I'm going to have to jump off here in just a couple of minutes. You guys can continue the conversation, obviously. And again, right after the stream, there will be a members-only stream. T-shirt will be there. I'm going to be with Stocks with Josh here at about 4:30 Eastern Standard Time. I want to let you guys see one more chart here from my screen, and I'm going to let you guys go. Remember, we talked about the high liquidation levels, and look at this. We got stacked T-shirt. There we go. Look at what's happened here. There was much bright. If you guys go back and watch our shows from the last couple of days, a lot of bright yellow in here down towards 55. That's one of the reasons why we marked that as an area to keep an eye on. And even though we didn't quite get there, we only kind of dabbled down to about 56.6. That yellow is now gone. Now, there's a decent amount still down here towards 50. So that's where, I think we've kind of prefaced in this stream, hey, I think Caleb put in a good way. I'm gonna steal it. I'm open to the possibility of a further move to the downside. There's still some boxes that need to be checked, but take a look at where the brightest yellow is now coming back into play. Back up here at 65,400. Going to be very, very interesting to see. Can potentially Bitcoin make a move? This is the 7-day, so this could take a week, 2 weeks, 3 weeks before you see things play out. But if I am a trader right now and I'm looking at all this negative momentum, this is a potential short squeeze opportunity. We are seeing the liquidations chart pitch for us. Will it happen? We're going to have to wait to see what price action looks like the next couple of days. To kind of wrap you guys out from my perspective, we know one thing about the FOMC day. Not a lot, but we do know one thing. Volatility comes before, volatility comes after. You got to kind of sit and wait for everything to shake out and then the dust to settle before you know with confidence what the next move should be. So please, everybody, if you want to look for little trades here and there, go ahead, be my guest. But nobody knows for certain what the next macro move is, whether we have further go to the downside or we're going to just kind of bounce back up and head to new highs. Continue to take in as much information and data as possible and watch the charts, watch the news, and make the best informed decisions you can day-by-day basis. You guys are going to continue on, but Caleb, good to see you again. T-Shroom, take it away. I'll see you guys tomorrow, same time, same place.
Absolutely. Well, Caleb, I don't think that we'll stay on too much longer, but I guess maybe just a bit more alpha here. Once we do get the all clear from the market and, Bitcoin gets back up above 63, starts pushing 64, 65, what are some of the altcoins that you're looking to bring more onto your long-term balance sheet? is that even something that you're considering, or is Bitcoin just far and away more valuable to hold in the long term?
Yeah, I'll just talk about it from a short-term perspective. And again, it's a bit of a cop-out because I'm going to need to see what's acting as leadership in that rally that gets us back above 61K, right? Like I want to be aligned with whatever the strongest trend is.
Gotcha.
Once we establish that constructive behavior, right?
That's a really good point.
Yeah, it's just relative strength, right? And so we could even, what some people like to do is say, what was the relative strength 3 months ago before Bitcoin peaked and crypto peaked? What was leadership in the bull market? Like, let me be clear. I think we're still in a bull market, right? But when the bull trend was really firmly intact, what was the leadership? And so you could talk about AI tokens, you can talk about memes, and maybe real world assets can kind of come into play on that as well. So, some people will say we just want to tether ourselves to whatever the leadership was 3-6 months ago. Or like for me, if I'm going to take very aggressive short-term positions where I'm only planning to be in a trade for 3 days to 3 weeks, right, is what I would probably kind of say my biggest sweet spot is, then I want to be aligned with whatever the strongest trend is over the past, 24, 48, 72 hours. So I'm going to need to see what is showing leadership in that environment if and when we get there, right? And it's still a big if, right? Like even here we are, I think we just dipped back below 57K, if not briefly. Let me pull it up here. Yeah, okay, we're back above. I mean, we're right on there, 57,000 pretty much on the dot. So we have a lot of work to get back above 61,000. And then even if and when we get there, can we stay above, right? Do we get to 61.2K and then do we just fall right back down? Or can we actually manage to stay above? So there's a lot of things that still need to take place here for me to really feel like I can fully allocate the short-term portfolio. Like, for example, I went long Solana this morning because we can go over my chart on this actually. If we go to the daily here, this was my buy zone right here on that red zone. We go to the high daily close from December and the high daily close from February, which resulted in a breakout, a retest, and a rebound to new cycle highs. So we came right back into this zone. I took a position this morning at 121, basically even. And so, I'm still in this. And just before we hopped on this call, I set a stop at 127.5. Again, I've been raising the stops as this trade has kind of gone in my favor. And look, I took a really big position in this. It's the only trade I have open right now, aside from being long Bitcoin. So, it's a big position that I have, but a sizable chunk of the trading portfolio is still in cash. And I only have this one position open. I don't want to be having to manage 5, 7, 10 open positions. I just want to have one big swing on a leading blue chip that's coming into a structural demand zone, and I have clear risk reward, right? When I took the position, I had my stop loss, my mental stop at 116, okay? So if I take it at 121 and I sell it at 116, I think I was looking at like a 3.5 to 4% stop loss on that, which for me right now feels pretty big, right? Like I was saying earlier, I want to have really, really tight stops. But I knew today we were going to get some volatility. I knew if I was going to be wrong, I'd still be proving wrong quickly. And I was willing to take a 3.5% stop. Because again, if we could get back to this pivot, which is basically like, let's talk about the trade setup. If we really zoom into this on like 4-hour candles, we can see it a little bit better. Okay. So here was the breakout. Here was the retest. Here was the rebound move. And so for me, what I wanted to see now was a potential return. And I always forget where this thing is. Long position. So I took this at 121. Let's just call it 121 even. Boom, right there. That's good enough. My expectation was to get a return back into that zone. And then I have my stop at 116.5 or somewhere around there. So again, we're talking about a 4% stop loss with basically 32% upside. So we're talking about 8-to-1 risk reward. That is nuts. That's insane. That's huge. So I was super happy to take a position like this, even if my stop loss was now 4% instead of what I would normally like in this kind of defensive market environment, looking at 1 to 1.5% stop loss, because we're talking about an 8x risk reward, right? And look, I don't know if we're going to get there, right? And like I said, I even already raised my stop now to 127. So regardless of what happens here, I'm in profit. And it hasn't gotten triggered yet, but now we're trading at basically 130, give or take. So this is kind of what I'm looking at here is basically and look, we could talk about another setup too. I didn't take a position in this morning because again, I wanted to be a little bit more defensive, but render here, I wanted to take a position if we came into this red zone. You could see we ticked it literally this morning at basically 689. I didn't take a position in this though. I just took the position in Solana because I was like, look, these AI, my risk reward here is really steep because I'd be getting stopped out at 632. That's much steeper risk reward. I think we're talking about 7% stop loss if we take it at the top here. Let's see if my mental math is right. Yeah, 7.5% stop loss. I don't want to take a 7.5% stop loss, right? It already feels like a big sacrifice for me to be taking a 4% stop loss. So look, there are going to be opportunities in this market, just as there have been opportunities over the past month and a half. Some of those opportunities have paid out, like my bonk position worked to perfection last week, but pretty much everything else has failed, right? And that's okay, right? So even the Solana position could roll over very quickly. The render one could roll over very quickly. So this is where we want to be extremely selective. When I have two potential trade opportunities, I want to take the one that's the highest quality with the lowest stop loss, and that was Solana.
Yeah, beautiful. I love it. Well, bros, we've got a little bit of a setup there if you wanted to kind of play along at home. If you're not an experienced trader, don't think that just watching what Caleb just showed is going to equip you for proper risk management and especially leverage trading. But maybe this is a time. I mean, there's a setup. Maybe you've been taking a hiatus from trading and kind of waiting for some volatility to die down. But in any case, Caleb, it's been a pleasure. Was there anything else that you wanted to talk about before we sign off? After all, it is Caleb Franzen Wednesdays, so we don't want to let any stone go unturned. If there was anything else you wanted to bring up.
No, man. I did see a question in here from Dylan Martinez asking me what leverage I'm using on that. None. Zilch. Nada. I'm in spot.
Very nice.
So I'm happy to kind of clarify that. But I'm not using any leverage. So I'm just in spot. In my opinion, you don't need leverage when you're trading altcoins. It's just like, it's really overkill. It's dangerous. Some people are really good at it. I'm not one of them, so I stay away.
Absolutely. All right. Well, if you all want more Caleb, if you just can't get enough, which I definitely can't, what I do is I go over to Twitter, formerly X, and I absolutely subscribe to Caleb Franzen, and he's also got an amazing Substack, which if you haven't checked out by now, you're way behind. Go ahead and check out Caleb on Substack. But it's always a pleasure to have you on, Caleb. And always. I think we broke down this FOMC decision pretty well. I'm excited to see how the market digests it over the rest of the week and into the rest of the quarter. Thank you so much for coming on. We're going to be going live tomorrow, 9 a.m. Eastern Standard Time. We've got all kinds of new videos that have come out this week. Make sure you go check them out on the iTrust Capital video that we put out on the top 9 coins to hold that are available on iTrust Capital, and also a review of the XYO crypto project that's really getting investors' attention. Go ahead and check out those videos for the bros, and we'll see you in the next stream. Adios.
Trying to make paper, turn that better to cake. Money like Lego, connect the dots that bank. We are investing bros. We are investing bros. Army pipe, lethal on trade. Entries and exits, worthy of praise. Tim, the professor of the TA. Shouted out loud on the PA. T-Shrooms news, got your word. Doing better than what he deserves. Beamer, leave no evidence. Soon fly coop with his dividend. Trying to make paper, turn that better to cake. Money like Lego, connect the dots that bank. We are investing bros. We are investing bros. Investing bros. Investing bros. Investing bros. Investing bros. Investing bros.